We're going to explore the QYLD ETF that has 11% yield and pays monthly dividends. Is this the best strategy for income seekers in retirement? So stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. The QYLD pays 11% yield. Now, anytime there's a fund that's paying way more than all the other funds, you have to stand back and just take a look at this. So we're going to look at this and see if it's a risky investment, or is this something that a person would want to be invested in. We're going to look at some of the advantages and disadvantages. So stay tuned for the full segment. Let's look at some basic facts about QYLD ETF. The inception date was 2013, so it's been around for a while. It has $5.84 billion in net assets. And down here at the bottom right, the current yield is 11.91%, and it pays dividends and distribution on a monthly basis. Let's look at some sources for investment income in retirement. You could invest your money in a certificate of deposit, pays about 0.5% per year right now at the time of this video. You could use municipal bonds. Let's say you buy individual municipal bonds. 20-year municipal bond might be 4% on an annual basis. A bond ETF may have a yield of about 4%. Stock dividends can vary, can be 2 or 3%, or it could be 7 or 8% on a stock dividend. And then we have dividend ETFs, which pay a dividend of about 4% on average. Now, QYLD is neither of these. QYLD uses a covered call strategy. So Global X Covered Call ETF uses the covered call strategy to develop these high dividend yields. Now, you can do this on your own. We do have some viewers watch our channel that do this on their own. But the nice thing about Global X Covered Call ETF, they take care of all this for you. So our next question is this a safe investment, especially if you're in retirement? We're looking at the dividend record here for 2021. Over here on the right-hand side are the dividends that were paid, and on the left-hand side is the date. But you can see here that the dividend is pretty consistent. Now we're looking at the dividends in 2020. Now in March of 2020, we had the pandemic, but you can see out here to the right that the dividends still were pretty much all the same. Now, the other aspect to the QYLD ETF is they buy the NASDAQ 100 stocks. You can see here a list of the top holdings in the QYLD. So they hold these stocks as the underlying stocks to write their covered calls against. So we're still talking a little bit about the risk here. We're looking at the QYLD net asset value. You can see here it can fluctuate. So it's not like a certificate deposit where your principal stays the same all the time. So when it comes to risk of QYLD, the dividend is fairly stable. However, you can get some fluctuation in the net asset value of the price. Now let's take a look at a disadvantage of QYLD. Now QYLD looks pretty good, has a high dividend yield, and it invests in the NASDAQ 100 QQQ stock. But look what happens with a growth of $10,000 invested. The red line here is QQQ, the blue line is QYLD. You can see that the QQQ will outperform the QYLD. But what is the advantage with the QYLD? It pays a monthly dividend of about 10 or 11%. If we look at the total return year to date in 2021 for QYLD, it had a total return of 10.63%. Out to 5 years was 11.14%. If we look at the total return for QQQ, we can see year to date 27.42% and a 5-year track record of 28.38%. Keep in mind here, we can't guarantee any future return from either QQQ or QYLD. But you can see the QQQ outperforms the QYLD on a net asset value basis. So what is our best strategy for QYLD if you're seeking income in retirement, or if you're looking for revenues with your investments, no matter what age you are? The best strategy for QYLD is to look at it as an income producing fund. Right now, producing over 11% yield. When you compare that to the QQQ yield, QQQ has less than 0.5% in yield. However, net asset value wise in the growth, QQQ will outperform the QYLD. But if a person's seeking income in retirement, it is a good, stable fund for income. So when is the best time to buy QYLD? When the market's at the highs, it's better to be doing dollar cost averaging. If you get a dip in the markets, then you can do some lump sum investing at that time. Keep in mind, there's two sources of income here. One from the dividend, and two is we want to see the growth of our net asset value. If we buy at the lows, then we have a greater potential to sell it at the highs. QYLD is an excellent source of income in retirement or any age if you're wanting to produce income. Now keep in mind, you want to be diversified. I wouldn't put all my eggs in one basket. You want to be diversified, but this would be an excellent source to get a high yield on your money. I want to thank you for watching here, so stay tuned for our next episode.